check.
And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, it's Thursday, second best day of the week. Michael Ewood's joining me this morning. Great graphic up on CNBC just as I was just tuning in. Brent missed it, but it was up there a second ago. It's calling about the great wealth transfer. So it's a bar chart showing exactly kind of what each generation will get. So baby boomers, their wealth transfer will be about 5.5 trillion altogether. Millennials have the largest chunk of wealth transfer. Those are those 24 to 47. They're expecting somewhere around $30 trillion, $34 trillion to be transferred to them. I got news from my kids. They say you can't take it with you. I'm figuring this out. So we'll see what happens. But yeah, I'm going to spend it all. There's going to be nothing left. I'm going out on a private jet, right? So
your last check is going to bounce.
Exactly. Anyway, all right, so a lot of stuff to get into this morning, of course. Yesterday morning, we had the CPI report. Came in right in line with expectations, came in at 0.27%. The estimate was 0.3. So, again, round that up to 0.3. But came in right in line with expectations. This is going to keep the Fed really kind of on track for cutting rates next week on the 18th. At that time also, we'll kind of get a good estimation of what kind of the forward guidance looks like for next year. We're going to talk some more about that this morning. Today, we have the PPI report. So this is the producer side of inflation. And the one interesting aspect of the CPI report yesterday is that data suggests that the PCE report will moderate lower in this report. Now, the PCE report, that is the personal consumption expenditure price report, that is what the Fed pays the most attention to in terms of monetary policy. So CPI really doesn't mean a whole lot in terms of the Fed and the economy and those type of things in terms of monetary policy. But it's just an input into the PCE report, and that suggested right now that PCE report will slow down a bit. Well, we'll talk some more about that with Michael Ewood this morning. Got a few things to get into with him as we kind of really get ready to wrap up the year. Yesterday, the NASDAQ hit an all-time high. The mega cap 7 stocks were hot earlier this year. And I thought this has been very interesting this year to watch, right? The Mag 7, all about AI and all this type of stuff. And, you know, what was interesting is earlier this year, they were on fire. We were writing articles earlier this year that, you know, the entire move in the markets early this year were all just the Mag 7 stocks. Nobody else was participating. Then this summer, the Mag 7 stocks came under pressure. They were way overbought, needed a bit of a pullback. So they came under pressure this summer. We saw some rotation in the markets. And, you know, everybody was like, this is where all the headlines came out. You know, Fred Hickey, other guys like, oh, AI's dead. It's all over with and blah, blah, blah. And now those stocks have come roaring back. Google has had a huge run. It's up about 10% in 2 days on a new quantum chip that they're coming out with. But also we're seeing Amazon, Apple hitting all-time highs as well. So again, the reason for that, and I was on Fox Business News with C.V. Payne back in early November, and I said, he asked me, he says, what do you think is going to perform at the end of the year? And I said, it'll be the Mega Cap 7. Because those stocks, most managers are underweight in, and they are lagging performance to the index this year because they're underweight those stocks. So in order to catch up with performance, they've got to buy those stocks, particularly the fact that they're now starting to perform. You're getting chased into those. They are also the biggest buyers of stock, so your stock buybacks contributing to that rise as well. But going into year end, we've got this window dressing, right? So these managers, they're going to have a really tough time going to their bosses and going, we didn't beat the index this year. We didn't match the index this year. We underperformed because we were underweight the Mag 7. When those reports go out at the end of the year, they better have their weightings in those Mag 7 stocks because that's where their performance was. So there's a bias right now to the end of the year for the mega cap 7 stocks to perform because they've simply got to play catch up with the index and make sure that those holdings are in their books. We talked about last week, we said this week and next week is the 2 weeks of the year where you have the most kind of pressure on stocks because of mutual fund distributions. So here's what you need to know before the bell this morning. On Monday and Tuesday, the market sold off, came down towards that 20-day moving average. Again, this is part of that portfolio rebalancing that we've seen. And if you kind of look at the rotation in the markets, a lot of the underperforming stocks that were underperforming over the last couple of months and those that were underweight in portfolios, i.e. like the mega cap 7 stocks, have had big rallies here over the last few days, even though the rest of the market was selling off. Yesterday, the market bounced a bit. That's not surprising. Again, you're getting a lot of shifts within the markets right now because managers are having to sell some stocks, buy other stocks to rebalance portfolios. We've got about another 3 or 4 days of this. So again, we may get some more sloppy trading this morning. Futures are down a little bit this morning. We're having a little bit of a weak open. But again, I think you're going to continue to see a little bit of sloppy trade here over the next, today, tomorrow, Monday, Tuesday of next week. And then starting around Wednesday when the Fed announces their rate cut, that's the setup for the beginning of really the Santa Claus rally. They'll announce their rate cut, but that's also kind of the 2 weeks of the year where you begin to get that push into the year. That's the window dressing. I've got to have these particular stocks on my portfolio, etc. The rally between basically where we are now to the end of the year is about 1% on average, about 1.4%. So it's not huge, but you do typically get a little bit of lift here to the upside heading into year end. So again, that's just kind of what you should kind of be expecting here. And again, it certainly seems to be setting up that way. Markets are very optimistic. This has been a very big year for the markets, which means there's a lot of managers behind the curve right now. And again, if they're underperforming the index, that's a really tough conversation to have with your boss. So they're going to have to play catch up here into year end. That's going to provide a bit of momentum push. Now, does that mean it has to happen? No, that's just normally how it's set up. So that's kind of the average of history. Doesn't mean we have to rally into year end. There's certainly been rare cases where we haven't, but normally, more often than not, you typically get a rally into year end. So again, this is, kind of, now, I wouldn't go out and just go whole hog into the markets because markets are still overbought here. We are kind of flirting with a sell signal at the moment. So there is some moderate risk here. But just the bias is to the upside. So this is really not a time to be overly cautious at the moment. Once we get into about mid-January, right around inauguration, markets are going to tend to perform early January. And around inauguration in presidential election years, like we'll have, or the first year of a presidential term, you tend to get some weakness in February, March, and April. So again, that's really hard to predict out that far. A lot of things can happen between now and then. That's just kind of seasonal tendencies of where the markets are. And with the markets kind of this overbought and this stretch, and particularly in a longer term, if we start looking at weekly and monthly charts, markets are very extended and very overbought. So, this is why we think next year could be a bit more challenging year. Again, do not bank on next year being another 30% return year. A return year more between 8 and 12%, if it's bullish, is probably be a lot more likely. And next year could very well be one of those years where we have a strong start, a pretty decent correction heading into summer, 15, 20% even, and then a rally into year end and actually wind up making some money, but it could be a bit volatile. So again, just kind of prepare yourself for next year. I don't think it's going to be nearly as easy in terms of managing money as it was this year and really last year. These last 2 years have been a cakewalk managing money. I don't think that's going to be the case this year. Could be wrong, but just things are getting pretty optimistic here. So that's what you need to know before the bell this morning. When we come back, we'll pick up with Michael Leibowitz. A lot of stuff to get into. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
What will a Trump presidency mean for your money? What is the market outlook under the new administration's policies? Register now for the RIA Economic Summit 2025 Market Outlook under a Trump presidency, featuring Adam Taggart of Thoughtful Money, RIA Portfolio Manager Michael Leibowitz, and Chief Investment Strategist Lance Roberts with the RIA crew. Saturday, January 18th. Register today for the RIA Economic Summit 2025 Market Outlook under a Trump presidency at realinvestmentadvice.com. Realinvestmentadvice.com. Register today.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
You're listening to The Real Investment Show.
And welcome back to the show this morning. Just wanted to apologize that we didn't have a live show yesterday. Got lots of emails and comments. Brent was on a full-blown bender yesterday, so couldn't quite get in and get the show going this morning. And we talk about job security, right? Brent has the ultimate job security. Nobody can run the studio but him, and he doesn't tell anybody how to do it for just that reason. So when
I've got a book this thick.
He actually does. It's about a 3-inch book that he's got to navigate the studio. But when he goes on one of these benders, I mean, just we can't operate. No. Actually, his wife was having some surgery yesterday, and he was with her, as he should be. Family always comes first, so we certainly appreciate and support him in that. And so yesterday, no show, but back today. Now, I will warn you, starting on the 23rd, there will be no live shows through the end of the year. Brent and I will be on vacation for Christmas, so we will have plenty of podcasts for you, all lined up. He's been working diligently. We have plenty of our best of podcasts. So if you go to our website, realinvestmentadvice.com, and this is always the case, if there's never a live show, I can promise you this: if there's never a live show on YouTube, if you go to our website, realinvestmentadvice.com, and Brent has links in the description of our show, go to our podcast. We're on Apple iTunes, we're on Spotify, we're on all Libsyn, all your SoundCloud, we're on all your major podcast channels, and we always have a show for you, right? So you'll always have a podcast of a show, and we always have best ofs for you and some of our best content to. Are you not entertained? I watched Gladiator last night to keep you entertained. Yeah, so my daughter came home from college. She's home for 3 days before she has to go back to work. And so we watched Gladiator because the new Gladiator's at the theater. So we're waiting for that to come out of the theaters.
Do your homework.
Yeah. Just to play catch. It's been a long time since I've watched the original Gladiator with Russell Crowe. Yeah. I've forgotten how really good it was. And I also forgotten how old I am now because he is so young. And now you look at Russell Crowe, he's like this big old fat guy. He's preparing for a Santa Claus role. But yeah, I mean, everybody was very young in this.
Oh yeah.
Yeah.
They look good in loincloths.
Yeah, exactly. And then now, but except the one black guy, I don't know his name. He's been in a million movies. Mm-hmm. I just saw him in a movie probably 6 months ago, and he looks exactly the same as he did in Gladiator. He never ages. It's amazing. But
We'll have to go look him up.
yeah, I have to look up it. He's been in a ton of stuff, and I just do not know his name. He's one of those actors that's in everything, and I just never know their name, but you see him all the time. Anyway, few things to get into this morning. Michael Leibowitz is restarting his computer, and he'll be with us in just 1 second. He was having technical difficulties. A couple of things that we'll get into today is, one, if you go to our website, realinvestmentadvice.com, Michael Leibowitz wrote an article yesterday about MicroStrategy, and it was interesting because Bloomberg called him right after and said, "Hey, we want to talk to you about your article." And that's like that's your dad calling you by your full name, Michael Ann Leibowitz. I don't know his middle name. I don't know his middle name. He lives up in Maryland. It's probably one of those more liberal states, so he probably has a female middle name. What is your middle name, Michael?
I can't hear it.
I can't hear you either. So
Try again.
try it again.
Hold on one
There you
second.
go. We got you. We got you. We got
You're
you.
good.
It's Anna.
It's Anna. There you go. See?
What?
Told you.
It's Paul.
So, all right, Mike. So interesting. Yesterday you wrote an article. It's on our website about MicroStrategy. And again, this was kind of, you and I have had this conversation for a while. And it was kind of interesting because Tom Lee came out, did an interview talking about MicroStrategy and their convertible debt offering. And he's saying, hey, this is a genius strategy. And everybody was like replaying this video everywhere. If you're a Bitcoin supporter with laser eyes, right? Everybody's putting this Tom Lee video up everywhere. But everybody missed the one important line he said. He says, as long as Bitcoin keeps going up.
Right.
And so which spurred our conversation about convertible debt. And again, this is one of those more rare kind of instruments in the markets that don't get a lot of coverage. People really don't understand. People don't understand really how bonds work in most cases. But when you start getting into some of these derivatives of bonds, like convertible debt, it gets really complicated really fast, and people just don't know about them. So you kind of wrote an article discussing this use of debt, this particular type of debt, this convertible debt, to fund MicroStrategy's Bitcoin purchases. And like I said, Bloomberg reached out because it was a very good piece. And by the way, if you haven't read it on our website, you should, especially if you're long MicroStrategy. You may want to really read this piece. Because there are consequences for convertible debt. But I thought I'd just give it to you, Mike, and let you just kind of explain kind of what your analysis was.
Sure. So why don't we start with MicroStrategy and what they are? They're actually right here in my backyard in Tysons, Virginia, right around the Beltway. And it's a company that's been around since before 2000. Cumulatively since 2000, they've lost about $1.5 billion. They're a money-losing company. Without diving too far into it, appears to should have gone out of business. But Michael Saylor, its CEO, and by the way, they were a darling of the dot-com bust in 1999, 2000. It had one of those parabolic moves higher, followed by a drop to the ground. And it basically sat near zero for 20-something years. And then recently, Michael Saylor had the idea that we're going to turn into a Bitcoin holding company. So through a combination of doubling their share count and issuing roughly $7 billion worth of convertible debt securities, they've been able to lever up and basically become a Bitcoin holding company. But again, bear in mind, this company has negative cash flows. Its net income has been negative for the last, I think it's 8 or 9 quarters, and they're a money-losing company. Their revenues, not all non-Bitcoin related, are declining. So, like you said, Lance, Tom Lee put out this little video. You sent it to me. I watched. I said, I got to learn more about this, try to figure out what kind of scheme he's running. And it's not necessarily a scheme. I used the word a couple times in the article. It's legal, questionable whether the SEC cares or not, but essentially it looks like an ETF. It's basically at this point a company designed purely to hold Bitcoin. But what's unique is that it's using debt. the whole Bitcoin. The problem with debt is you have to pay debt back. And that's all fine and grand as long as Bitcoin can stay above a certain price. But if Bitcoin falls, their liabilities are worth more than their assets, and the company goes bankrupt. But Michael Saylor, smarter than that, he says, he's using convertible debt. So convertible debt is unique. And basically what it is debt with a call option. In this, they just issued a $3 billion bond. So we'll just talk about that bond. That bond is $3 billion, pays a zero interest rate. So you get your money back if the price of Bitcoin doesn't go higher. But it does have the call option. So the call option strikes at about 50% higher than the current price. So the stock has to rise by 50%, at which point the option strikes, and it makes sense to buy the MicroStrategy stock. Not Bitcoin, but the MicroStrategy stock, the shares of the stock. So let's just say the stock goes up 50%. In 5 years, you'll have earned zero interest, and you'll basically earn nothing on the MicroStrategy shares. You're buying them basically at the market price. So a zero return. MicroStrategy is rated B. That's junk. You can buy companies that are junk rated, 6, 7, 8, 10%. So you're foregoing about 40 to 50% of total return, assuming whatever your opportunity company that you bought doesn't go bankrupt. So right off the bat, your hurdle should be about 40 or 50% return. So again, with zero interest, that means MicroStrategy stock basically has to double. It has to go up 50% to get to the strike price, and another 50% to offset the coupon to offset the opportunity cost of the coupon of a junk bond that you could have bought. So what's he really selling here? Again, if we talk about options, there's a lot of factors that drive the price of options. But there's one kind of market variable, and that's implied volatility. Mm-hmm. He's selling implied volatility. The more he can make the market think that MicroStrategy shares are going to be very volatile, the more those call options are worth. Right now, MicroStrategy has the highest implied volatility of all 500 S&P 500 stocks. And this is crazy, but it's got almost twice the implied volatility of Bitcoin. So I think what he's doing and what shareholders are doing, it's not just Michael Saylor, it's really shareholders and social media. They're pushing up volatility on MicroStrategy and hyping Bitcoin and hyping MicroStrategy. And it's a great plan as long as Bitcoin keeps going up and MicroStrategy, importantly, keeps going up. But Bitcoin can go to 1 million, but if it's on its way, it goes to 20,000, and one of those bonds comes due, MicroStrategy could be in a lot of trouble.
Well, that was going to be one of my questions, and when we come back from the break, I have a couple of questions, in reference to this, because this really just seems like a hugely, it's just, kind of just essentially a 3 or 4x levered ETF, kind of on Bitcoin in a way. So maybe the leverage may even be more than that. You can give me the math when we get back from the break. Don't go away. We'll finish up this conversation. We do need to talk about the Fed, yesterday's inflation report, what that all means for the markets. So we'll come back and get into all that right after the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
What will a Trump presidency mean for your money? What is the market outlook under the new administration's policies? Register now for the RIA Economic Summit 2025 Market Outlook under a Trump presidency, featuring Adam Taggart of Thoughtful Money, RIA Portfolio Manager Michael Leibowitz, and Chief Investment Strategist Lance Roberts with the RIA crew. Saturday, January 2018. Register today for the RIA Economic Summit 2025 Market Outlook under a Trump presidency at realinvestmentadvice.com. Realinvestmentadvice.com. Register today. Register today.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Over the weekend, my wife wants to string some lights along the back porch for Christmas. And so I go, hey, you know what? I'll get my son to do this.
The Real Investment Show podcast.
So I said, here, take these strands out there. You and my daughter's boyfriend, y'all go out there and string these lights for them.
Same show, your schedule.
And as soon as they get out there, they unstring the lights. My son steps on 3 of the bulbs, breaks the bulbs. We don't have any replacement bulbs for them. So we have no lights now.
At realinvestmentadvice.com.
We don't get our kids to do things. We do them ourselves because we want them done.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back to the show this morning. You know, we've now come full circle on the Fox News right now. Up on our monitor, they're talking about New Jersey lawmakers demand answers to mysterious drones. So there's been these flying lights up in the sky over New Jersey last couple of days, and everybody's like trying to figure out what they are, where they're coming from. Well, you know, back in the day, if you saw mysterious lights floating around, you thought they were aliens. Now we just assume they're drones. So now aliens have come back and they're like, ha, they all think we're drones. Ha! Fooled them. Make up your mind. Either you're an alien or you're a drone. Just pick it, one or the other. Anyway. All right, Mike. I have a couple of questions about, so just for the break, talking a little bit about Michael Saylor, the Bitcoin strategy here, this kind of leverage bet on Bitcoin. So really kind of 2 questions come out of this is one, you know, it's kind of an interesting dynamic because there's only so much Bitcoin out there, right? MicroStrategy is now the third, I believe, don't quote me on this, but I believe he's the 3rd largest Bitcoin holder next to the creator of Bitcoin, who actually burned the keys to his fortune, which is worth like $100 billion now. So that's, you know, a big chunk of Bitcoin that's never going to move because he can't get access to it. And then institutions like, BlackRock and others, the ETFs hold, you know, kind of another big chunk of these of Bitcoin. But there's a limited supply of Bitcoin. So one of the issues of just continuing to buy Bitcoin is that eventually there won't be any Bitcoin to buy and then what happens, right? So you're kind of creating you're kind of creating your own momentum by being a major buyer of Bitcoin. You're dragging the price higher. And then the problem becomes is ultimately is like what happens when you can't buy Bitcoin.
Right. It kind of reminds me of the Hunt brothers trying to corner silver. It worked really well until it didn't.
But a little different though. If you remember the Hunt brothers, they were trying to corner the silver market. And there's a lot of people, you've written an article on this. I think I've written an article on it. And a lot of people don't know the story of the Hunt brothers. The problem with the Hunt brothers is they were trying to corner what they thought was a limited supply of silver. And then everybody started like selling grandma's silverware, scraping the back off Polaroid film, et cetera. So there was all this other supply that they weren't aware of. And that's not the case in this case with Bitcoin. There is a limited supply. Once 21 million coins are produced, that's all there is. So it is somewhat different. You could theoretically corner and own all 21 million coins or whatever the number is.
At which point it's worthless then, right?
Well, it's long, you got to have a buyer, right?
Right. Look, it's easier to corner a market with limited supply, obviously, right?
Right.
So that's what he and other people are doing, right? They're not dummies. They're driving up the price. What their end game is, I don't know. My guess is that Michael Saylor is going to ride off into the sunset, and a lot of people are going to be very unhappy.
I guess that's my point is like in order for this to work, at some point you've got to sell it, right? You've got to pay your debt holders off at some point unless you can. So, and this is kind of the other question I had was about the debt holders. You made a very, very good point in your article because I was wondering, is like, why would I buy, and you brought this up, right? So why would I buy a 0% convertible bond for Bitcoin? Why don't I just go buy the Bitcoin? Well, if I'm a bond fund, and I want exposure to Bitcoin, I can't go buy Bitcoin. I can't go buy a Bitcoin ETF. I have to buy bonds because I'm a bond fund. And so he created a market for bond funds, and this is theory, right, on my part, but he just basically created a market for bond funds to own Bitcoin.
Right. I think
which was actually, I'm giving him credit, that's kind of genius.
Yeah, that is the natural buyer of this. And I don't know how many bond funds in those same shoes are the ones that bought. I'd be curious to see what the composition of the buyers looks like. How many are retail investors? How many are bond funds? What are the rest of them? My guess is there are hedge funds. There's a lot of both smart and dumb money chasing this thing.
Right.
And you know what? The prior convertible deals so far are working out really well for those people that bought them, because those conversion prices are much lower because Bitcoin has gone up, MicroStrategy has gone up so much. So, it's not to say this won't work, but it's, I wrote the article to inform the public of what it is, what type of returns that you need to generate and MicroStrategy shares need to generate in order to make money.
Right.
And everyone, I think it was Saylor that said he expects a compounded return of 29% a year for the next, I forgot, it's in the article, 10, 15, 20 years. 20 years, I think it was.
Right.
Nothing rises like that for 20 years, or very, very few things do. Maybe he's got one of those here in Bitcoin and MicroStrategy stock. But, there's a lot of risk involved in this. But Lance,
go ahead.
I was going to say one of the even more interesting than kind of research and writing the article is the response I got from Twitter or X, I guess.
Yeah.
I got either great job, amen, we're with you, brother, or a lot of
hate. You
are an idiot. What does that CFA stand for? You obviously don't know anything about anything. And some of the people had some okay responses. Some of it was just moronic. I mean, it's really, a lot of it's just a cult-like. it felt like very cult-like I was denouncing God or something.
No, it is, and it's very interesting when you present an argument, and I get this a lot on X and Twitter, social media articles that you and I write. I get a lot of pushback on them because when you start to tread on the thesis of some degree, the immediate response is, we have no idea what you're talking about. You don't understand it. You need to go understand what this is more. And if you actually get down into this, and even Michael Saylor, said this as well in several of his conversations, well, this is an asset backed by math. Math doesn't give you value, right? What gives you value is a buyer. You have to have a buyer to give you value, right? Real estate, you can, just as an easy example, if you have a house in the middle of somewhere, right, and let's say the middle of the desert in Arizona, and nobody wants to buy your house, period, the house has no value. You may say real estate has value because there's dirt, but it has no value if nobody wants to buy it. So saying something's backed by math, and that's what gives it value, a house is backed by math, right? I can mathematically come up with a value for a piece of real estate, but if nobody wants to pay that, it has no value. And and at the end of the day, this is all this comes down to, is really whether or not somebody wants to buy cryptocurrency. Because at the moment, now this may change in the future. Now, if we get to a point in the future where we can start doing financial transactions in Bitcoin, if we can start using Bitcoin as a alternative currency for actually doing, buying a piece of real estate, buying stocks, those type of things, buying cars, getting a mortgage. We tried all these things, right? We tried doing the mortgages. Tesla tried selling cars in Bitcoin. We've had athletes that have tried to do, their contracts in Bitcoin. It didn't work well because the volatility is so high. And it's hard to do a transaction on something that moves 10 or 15 or 20% in a day. That becomes very difficult. But at the end of the day, if nobody wants to own Bitcoin, it doesn't matter that it's got a limited supply and it's backed by math and it's super secure. If nobody wants it, if nobody's willing to buy it, it has no value. And so that's the one kind of flaw that kind of keeps circling back around. And the other side of this, Mike, is that there's a reason you can't print US dollars in your basement, right? Otherwise you go to jail. The problem with cryptocurrency is that I can just create a new one. We just had the Hot Tua coin come out that that basically went
Bart coin.
Well, yeah, it went, Hot Tua went, surging off to the moon, and then everybody that started it dumped all their coins and basically stole all the money. There's got to be regulations around issuance, because if I can ultimately issue more and more coins, which one are we going to use for a transaction? Let's just say we get to the point we can do mortgages and we can do real estate. I can buy stocks using some type of cryptocurrency. It's got to be one at some point. If I can just create more and more currencies, then I'm eroding the value. It's just like printing more and more dollars, right? You erode the value and the scarcity of the item. If I can just issue an unlimited number of currencies through the crypto channels, right?
Yeah. So, Lance, I got a question for you.
Sure.
When was in our careers, there was another math-oriented, can't lose investment idea?
You got me.
It was all math-based by some of the smartest, mathematicians,
yes,
finance guys in the world.
1998 or 7.
Long-term capital.
Yeah.
Correct. And what happened there? Apparently the math failed them.
Look, it is interesting. It is very much a cult-like asset, and it's fine. There's nothing wrong with it. Look, just fair disclosure, I'm long Bitcoin, I'm long Ether, I've got some exposure to Ripple. I'm long these things because they're going up. I will sell them at some point, and it's an asset. And the important thing about this asset in particular is it's highly correlated to risk taking. And so if the market declines sharply, if you're worried about a crash, it's going to fall with it as well. Be right back after the break. We'll talk about the Fed, CPI, and what's coming next. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
What will a Trump presidency mean for your money? What is the market outlook under the new administration's policies? Register now for the RIA Economic Summit 2025 Market Outlook under a Trump presidency, featuring Adam Taggart of Thoughtful Money, RIA portfolio manager Michael Leibowitz, and chief investment strategist Lance Roberts with the RIA crew. Saturday, January 18th. Register today for the RIA Economic Summit 2025 Market Outlook under a Trump presidency at realinvestmentadvice.com. Realinvestmentadvice.com. Register today.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, get ready to wrap up the show here. Talk a little bit about CPI yesterday. Came in, as I noted at the opening of the show, kind of right on the screws. Came in at 0.3%, actually 0.27%. They rounded up to 0.3. Saw a little bit of a pickup in inflation in food costs, insurance costs, deflation in housing costs. So again, just kind of moderating lower. And it's going to be a stick. Inflation is going to be sticky at these levels right now because that's where economic growth is. Right now, if you take a look at the Atlanta Fed GDP report, we're running about 3.2%. If I annualize out just round it, I need easy math, 0.25%, every month for the next year, that's 3% inflation. So we're about right now where economic growth is, which is where inflation should be. So, I saw a ton of articles out yesterday. It's like, inflation's sticky, it's not going down. No, it's about where it should be. But if you take a look at GDP expectations over the next 2 years, Morgan Stanley just out this morning as a matter of fact about this, forecasting where GDP will be in 2 years. GDP is expected to be below 2% in 2 years. So if you're going to have 2% economic growth, you're going to have roughly about 2% inflation once you get there. And one of the other, kind of important points about this is that right now, the U.S. has exceptionally strong economic growth because of all the stimulus that we did in the markets previously. All that's still filtering through those billions and billions of dollars. In fact, one of the things that is going on with the Biden administration right now is like yesterday, he issued out 1,500 pardons. So we're in that, that's the most commutations of sentences ever by a president. But the point about that is that we're in that lame duck session for President Biden. So this is just push everything through your wish list that you can do, just get it done now before you're out of office. So we saw that yesterday. One of the things that, and don't be surprised about this, is that over the next month or so, there's still a good bit of money from the Inflation Reduction Act that has not been sent to the states yet, that has not been spent. There could be a very fast move here by the administration to try to get that money distributed out into the economy, which would give economic growth a boost over the course of the next several months as that money flows through the system again. But if you take a look at the U.S. versus every other country in the world, every other country in the world is pushing towards recessionary territory. There's a big gap between inflation and economic growth between every other country in the world and the U.S. We're very much an island of economic growth. That is not sustainable. Either the rest of the world is about to have a growth spurt to catch up with us, or we're going to slow down. The reality is that we're probably going to slow down more towards where the rest of the world is, because we're going to import their disinflation and export our inflation over the course of the next couple of years. But Mike, I'll turn this over to you and your thoughts.
No, that's a great point. And one of the things I was going to write up today for the commentary that'll come out tomorrow morning is Canada. They just cut rates 50 basis points. They've cut them, I believe it's 1.5% so far. Their economy has been sub 1% now for 4-6 quarters. They're basically, borderline recessionary and struggling. Now, so who cares? It's Canada. Well, Canada, the Canadian economy and the U.S. economy have an incredibly strong relationship. Not only are we big trade partners, but just being next to each other, there's so much flow of money and investment dollars and again, trade that happens that our economies just correlate extremely well. And you go back over the last 40, 50 years and you draw a line of the two GDP numbers and they look the same, except for right now, there's this kind of gap that's forming. And, I think some people say, oh, but that's because U.S. is a service economy and Canada is a lot more manufacturing and commodities, which is true. That is true. But that was also true 2 years ago, 4 years ago, 6 years ago, and 8 years ago. We didn't just become a service economy. This has happened over 25 years or so, yet the two economies have stayed very closely linked together. Mm-hmm. So like Blanche, you said, China too, that's a huge one. They're the marginal, basically, driver of economic growth, or have been for the last 15 years. We wrote something on oil. They were responsible for 60% of the marginal purchases of oil over the last 5 years or so. China is slowing down rapidly. Parts of Europe are in recession. Other parts are dwindling. Japan is, like they've always done, they're muddling along. They're actually doing slightly better than they have been, but slightly better is 1% growth. So, it's hard to continue, like you said, without more and more stimulus, which I think is harder to come by now. There hasn't been nearly as much stimulus as there was. We're just still dealing with sort of the remnants of that, hard to believe, but the COVID stimulus.
Yeah, I mean, there was just so much money, right? And I've talked about this on the show before. It's just been, and again, it's not just been domestically here, but the amount of foreign inflows into the U.S. market have just been staggering, which is also why the dollar's been, very strong. As it's just attracting more and more dollars into the U.S. because, again, this is the only place that's going up, in terms of value. So, I want to have my money invested, in that type of an economy, and economic growth is going to attract more foreign capital. So, it's been quite phenomenal between all the stimulus, between the foreign inflows, between, all the other things that we did, like debt forgiveness, et cetera, how much money has just infiltrated into the U.S. markets. And when we look at, 2021, where we were sending checks to households and you saw ETF inflows go up by almost $1 trillion that year, that was understandable, right? We're sending trillions of dollars to households, so it was understandable. You'd see a lot of that flow back into ETFs. This year, you set a record on ETF inflows over $1 trillion, but you don't have any of that other stuff. And it's just amazing how much money has just been pulled into the markets. But, you look at consumer confidence of, recent consumer confidence surveys, their expectations of stock markets over the next 12 months are at records we've never seen. And these surveys go back to the 60s. And you've never seen such exuberance about stock prices by consumers ever. I mean, it's really kind of fascinating. That's one of the reasons why, I think next year might be a surprise to maybe a bit more of the bullish crowd.
Right. That's one of my bigger concerns. I mean, there's a lot on our plate for next year. We've got a new president, new Congress, but just the level of sentiment and speculation, it's like we were talking about with MicroStrategy and Bitcoin, it's all over the place. I saw something called Fart Coin, which has been up like incredible amounts over the last days, weeks, whatever it's been. That's just pure speculation, but it's also in the U.S. markets, in the stock markets. And it's the degree to which people are confident that next year is going to be another 20% plus year is just too high. And the old saying goes, when everyone's on one side of the boat, you better get to the other side.
At least be first.
At least know how to get there. Yeah. And, I think that's the important part. It's okay to be on that one side of the boat, but as you start to see signs that the boat is starting to tip or creak or whatever it may be, start going the other way. And I as we think about next year, that's kind of our MO. We'll play with, we'll stay in the market, we'll take advantage of it, but we're going to be very alert for signs that boat is starting to flip.
Right. Well, and again, this is the one risk that investors need to understand is that, there was a comment in chat, what's wrong with 95% of the investing public just owning the Qs? It's fine. There's nothing wrong. It's just, and this is every asset, right? It's Bitcoin or stocks or real estate or whatever else it is. It's all fine to own it, right? It's all fine to buy it but the question is, as long as prices are going up, this is the epitome of the greater fool theory, right? I can buy Bitcoin today on expectations that the price is going to go up. But in order to realize that gain, I have to find somebody willing to pay a higher price for it at some point down the road. And at some point, there's going to be a position somewhere in the markets, and you never know where this is. And again, it's any market, stocks, bonds, whatever. There's a point to where somebody says, I'm taking my money and going home for whatever reason. And if that reason resonates with other buyers and they see, a hedge fund, they're exiting their position, the other hedge fund goes, well, man, maybe I better get out. So they get out. And then another hedge fund sees them getting out and go, maybe I better get out. And then it starts this, and this is Mike's point about the boat. You see a few people kind of going to the other side of the boat, then all of a sudden there's this herd mentality and they go, oh my gosh, look at those guys over there. And they all run at one side and you're left holding the bag. And this is why we talk about risk management, taking profits, rebalancing risk. What you don't want to get caught in is that stampede to the other side of the boat. Mike?
Yeah, and I think to your point, a lot of people believe in all these speculative investments right now because they're going up every day. They just go up. What's there not to believe in? It's great. It's easy money.
Yep.
But like you said, Lance, once they start flipping around, once they start going down, what if Saylor sells some Bitcoin or sells some MicroStrategy stock? That can change the atmosphere very quickly, right? So, you just got to be careful. You got to watch. You got to pay attention because we're at that phase of a bullish run where we could have a blow-off rally that takes us up another 40%, or Michael Saylor sells some MicroStrategy, or they can't pay their debt, or something happens that seems so small, and it is small, but subprime was small, and things can ripple and have a big effect, and that's just where we have to keep our eyes.
All right, that wraps up the show for today. Thanks so much. Have a great weekend. See you back here on Monday. Richard Russo, Danny Ratliff, and tomorrow for Financial Fitness Friday. Newsletter out this weekend. See you Monday.